Hello everyone, and welcome back to Crypto Bytes, where we discuss all things crypto, DeFi, airdrops, and more. My name is Brian, and if you've been following any of my videos over the past 6 to 8 months that I've been on YouTube, I think you've seen by now that I really have a strong focus on achieving yield with the different crypto assets that I decide to purchase and utilize. And so, each video I typically share some of the best farms that I'm doing at the moment. But I've never actually, I don't think, gone into detail on how exactly I'm finding these farms, how I'm figuring out which tokens I want to actually invest in, and kind of the whole gamut that determines, how I'm focused on which yield and which opportunities, because there's a ton of different opportunities out there in crypto, more than you could possibly keep up with, depending on what you want to do. And so today I wanted to have a video where we just go over the topic of, how do we determine which assets we want to invest in? How do we determine, where we want to invest in the map, meaning which farms to deposit them into, and then how we go about managing those as time moves on, and when to cut and when to take profits and things like that. So we're going to attempt to do that today. So without further ado, let's jump in on that. Cool. So just to start, I know I've brought up DeFi Llama in the past, but there's this great page there called, they have a yield section and then they have a pool section. And right now I have this basically a little bit filtered, but it's sorted by the current APY. And you can see here just some massive APYs to be had. Like I'll just scroll down to many hundreds of places. Let's let that load. And you can see here still we're at the 200th from the top, and we're still able to find opportunities that are paying 153% APY on a specific asset. So there's a ton of different ways to generate income with your crypto assets. I know across YouTube, for the most part, you just find a lot of people talking about, which assets to buy and hold and do nothing with. They just sit in your wallet. Now, for some things that's the only thing that you can do with it. Like not all assets have pools that you can deposit into, but for me, when I want to buy into a certain asset, if I'm able to earn a yield on top of just holding that asset, so any price appreciation, that's great, but by getting the yield, it not only helps offset any losses that I might come about in the short term or longer term from holding that asset, but also just it increases my gains as well. There's such a thing called impermanent loss, which we'll get into later on in this video. But generally speaking, that's the concept here, and that's something that I pretty much do day in and day out, is I'm finding assets that I want to invest in that I think are going to have some price appreciation upward or at least neutral, and then I want to find the best yields that I can for those assets so I can make my money on the yields, and if the price appreciates, even better. So that's what we're all about on this channel, and that's what we're talking about now. So yeah, on DeFi Llama here, if you come to the yields and pools, you can basically see all the different opportunities. I'll come back to here in a second. So how do we figure out what tokens we want to even invest in the first place? Now, there's lots of different ways to do that, and this is definitely not the most comprehensive way, but simply kind of my process is I'll come to CoinGecko, or you can go to CoinMarketCap, and first let me see, I'll sort this by the top 300 assets because it defaults to 100. So we're going to sort this by the top 300 assets, and then what I like to do, depending on how the market is going, I want to then sort those assets based off of the 7-day price appreciation. So basically, what are the top gainers on downwards in the past 7 days? You can do this in the past 30 days as well, but especially in, right now we're talking in early August 2025, and the market is somewhat volatile. So something that might have been a gainer in the top 30 days, maybe it did all those gains 20 days ago, and now it's not doing so hot. So that's why, or vice versa. So that's why I like to look at the 7-day as instead of the 30-day, but you can certainly, use the 30-day also if you wish. So yeah, let's sort this by 7 days. Okay, so we see here, these are the coins in the past 7 days. And basically what we're looking for are, what are the tokens, in this case in the top 300. You can, of course, expand on this if you want to go down, the risk curve more, but the top 300 is pretty good. And so we're looking for which tokens have outperformed definitely Bitcoin, and if you want, depending on how you structure your portfolio, has outperformed Ethereum as well, since Ethereum has been outperforming Bitcoin. So one of those two, you basically, are you either gonna, if you want to just focus on holding something a little bit less risky, that's Bitcoin obviously, and there's decent yields that you can get on that, 20, 30, 40%, sometimes higher on Bitcoin. But if, we're in a bull market now, if you want to get a little bit more risky, then you're looking for what is outperforming Bitcoin. So let's scroll down until we get to Bitcoin so we can see basically what we have to work with. Okay, here we are. So we're at Bitcoin, which in the past 7 days is down by about 2%. So we have all these other assets above it that have outperformed Bitcoin. And so what I want to do from there, once I have this list of assets, is then I would just want to see, generally speaking, how are they doing on their own accord, basically. So we then go over to TradingView. And what I use is basically on the 4-hour chart, I used the moving average indicator, and I set it for the 200 moving average. So over the last 200 4-hour periods in this example, what is that smoothing line? That's what this blue line is. So, you can see here, let's go to Bitcoin. So at the moment, in the past week or so, Bitcoin dropped below. It's been above its 200-day moving average, 200, sorry, not day because we're on the 4-hour chart. 200 moving average, it's been above there on the 4-hour for quite some time. It dropped below there on Friday, and now we're seeing it attempting to get back above it. So in this case, if I was making a decision on an asset to get into right now, I wouldn't be going into Bitcoin because it is below its 4-hour 200 moving average. Once it breaks above, then that's typically a pretty bullish move, and we would want to get in, especially if it retests and then goes. But for now, if we're just trying to pick what to get into today, in this example, we wouldn't pick Bitcoin. You can see a couple others, like Hype. Hype is well below its 200 moving average. Ethereum, however, has maintained above its 200 moving average. So this would be an asset that I would be interested in buying for that reason. Now, yeah, let's leave it at that for there. So yeah, with TradingView, what that can help you with is for any major tokens. So I know we saw ETH has outperformed Bitcoin, so that's a good contender to get into. I think we saw XRP was also above Bitcoin. Let's see if that's above the 400, the 200 on the 4-hour. So it went below and it actually came up. So this is pretty bullish for XRP. So in this example, let's say that both XRP and Ethereum are two assets that we want to get into based on the current price action. They're both outperforming Bitcoin, and they're both above their 200 average on the 4-hour. If you wanted to get into meme coins and things that are lower on the risk curve, not all of those are going to be in TradingView. So you can use Dex Screener as well. So like here, as an example, a pretty hot coin over the last month or two has been Useless. that just dropped below its 200 moving average on the 4-hour, and it's attempting to retest it right now. So we wouldn't want to get involved in this based off of that criteria at the moment. And one thing to note is that with meme coins, we're looking at basically the last 200 4-hour period. So if a coin just launched last week, there's not going to be a 200 moving average on the 4-hour. There might be on the 1 minute or 1 second chart, but you need at least 200 units of the time that you're looking at for this average to form. So, okay, now that we've figured out in this example that we like Ethereum and that we like XRP, I would do a couple different things. First thing is I'd come back to this yield page on DeFi Llama, and there's going to be a ton of opportunities with ETH, so I won't type that in. Let's do XRP though. And so you can see here that XRP is not something that is really utilized in DeFi, maybe on their own chain, but I've never even touched it, so I wouldn't know, and I don't know if DeFi Llama tracks that. But it looks here if you can get into a UXRP ETH pool on Aerodrome on Base, and that's currently paying 113% APY. So let's go ahead and visit that. In this case, we're looking at two assets that we've both said that we would be interested in depositing into XRP and ETH, and we're able to get 100%, 113% APY by holding those tokens if we deposit into this pool on Aerodrome. So for me, this is a pretty good example of what we'd be wanting to look for if we're looking to get yield on top of just buying and holding an asset. Okay, so we're here on Aerodrome in this UXRP ETH pool. In this example, it looks like it is just a basic pool, so it's not a correlated pricing where you would want to set the range. So in this case, you would just go ahead and type in however much. You first need to buy these assets, so you need to have them in your wallet. You can swap for them on Aerodrome or relay, jumper, whatever you use for swapping. And then you come in here, put in the values. It would be an even amount on both sides, deposit, and then basically you just watch the APYs go. Let me find a pool that is a correlated pair, concentrated, pair. Let's check this one, Arrow CB BTC. No, let's look for a concentrated pair. So here we can go with this ETH USDC concentrated pool. It's currently making 368%. So I'm sure if we would have looked on DeFi Llama, this would have been one of the pools that popped up. I just want to show you how I determine, what range to put for these different assets. So in this example, I would get the pool info. So you get the pool address here. So once you copy the pool address, then you can come back to Deck Screener. In this example, in these cases, you would want to use Deck Screener because it's going to be showing you the actual DeFi pools, whereas TradingView is just the assets themselves. They're not going to have this kind of data in there. So here's the pool that we're looking at. Okay, and so then we have the price details. In this case, by default on Deck Screener, just a note, is that it's always going to show the first asset in the pool, so ETH in this example, versus the US dollar chart. In this case, obviously the US dollar is the same as USDC, but if we would have looked at this, the ETH versus the UXRP chart, obviously that's not going to be based on dollars, it's going to be based against themselves. So just make sure when you're looking at these on Deck Screener that you select the right site here for the actual asset that's being paired with, the token, the pool that we're looking at. So in this case now, we're on the 4-hour chart. This is going to come down to how often you want to be basically monitoring your position. So for me, I'm online all day long for the most part, so I usually bring down my view to like the 15-minute, and so in that example then I would pick the high and the low of that time period, and that would kind of be my range that I'd be going for, in the pool for this example. So as long as the price is within those points, you're earning that APY. If it goes in above or below, then you're no longer earning that APY. So in this case, the high, we're pretty much at the highs now, so that wouldn't be ideal. So I'd want to go to a higher time frame to kind of see a better range perhaps. So let's go to the 4-hour. And so now we can see that, maybe a good range is this about 38.50 down to, you could go as low as 34, but if you wanted to be tighter, you could probably go to like 35. So you see here how pretty much from here to up here is been a range that it's been in for, a couple of weeks now. So you probably, you'd want to check this position every couple of days, and I think you'd be okay. And then, if it goes inside or outside of your range, then you'll just want to do the same example again, and then reset your range, assuming that, the assets are both still outperforming Bitcoin and also still above their 4-hour moving average. If those things don't match, then that would be a time that I'd be getting out of the position. Another thing that you can do here is, it just really comes down to what your interest is. For me, I'm just looking like, what are the things that are outperforming Bitcoin? What's the range that's going in? I want to maximize that APY. I really don't care necessarily about the assets themselves. I really just want the yield. But you, on the other hand, maybe you really want to build a position in ETH, and so, you're hoping to get that position filled at 3,400 in this example. So in that case, what you would want to do is, do that wider range, because when you're putting, USDC in this example, you could start, let's go here. When you say the high is 38.35, you could go and you could put the slow down to 3,400. Now see here, I have to switch them. See here that if it wants to work for me. Okay, sorry about that. It was a little laggy, but we got it. So, yeah, based on this range, if you set it, so the high of the 38, 35, 38.50, the low 3,400. If your objective in this example is that you want to buy ETH, as low as that price, then you would do this, and you can see that when you deposit in the pool, you're almost a 3-to-1 on how much USDC you're depositing into the pool, because what's happening is that as the current price is here, as the price is going down, your USDC that's in the pool is buying the ETH, so that by the time you get to the edge here, your position is now 100% ETH. You no longer have any USDC. You've basically been swapping it along the way. You're earning the fees at the same time. That's what this APY is from. And then, by then, you're left with the $3,400 ETH, and then you can decide, do I want to take it out and hold it? Do I want to go ahead and determine another range here and put it back in? There's a lot of different things that you can do, but in this example, that's how you could basically ladder in DCA into a position for a token that you want and get paid for it at the same time. So that's why I really like doing these, yield, the liquidity providing, because if you're going to buy a token anyways, you might as well be getting paid to do it at the same time. So that's what I'm about, and that's how you do it. As far as taking profit, it's kind of up to you as well. What I do is I pretty much deposit into the pool, what I want to allocate into a specific token at that point in time based off of my portfolio. Typically, that's going to be between 1 to 5% of my portfolio, depending on, how much conviction I have in it. In the case of if I was trying to build a position in ETH, it's probably going to be 5, maybe even 10% because, it's the second highest asset out there. If I was trying to build a position in Useless or some other meme coin, that's definitely going to be 1% or less because, the volatility on that is much higher. Obviously, the payoff is more, but volatility is much higher. So that's pretty much how I go about figuring out which assets we want to get involved with, making sure that it's trending upwards, meaning it's above its 200 moving average on the 4-hour, and then we figure out what are the best yield opportunities for that token, and then we come and we either deposit it into a simple LP, which we saw the example on with the XRP ETH position, or how to figure out what range you want to set, if you're doing a concentrated volatility pair like this one in this example. Now, like I said, once I figure out different assets I want to do, when I want to get involved in, I'll first go to this DeFi Llama page. But then what I'll also do is there's certain websites, certain apps that I just use on a daily basis, and I like the way that they work. And so, they don't necessarily always show up on DeFi Llama, but I want to get involved there, so I'll just go to those directly. So some of those, just real quick, I'll show you. So G-Liquid on Hyper EVM is an up-and-coming protocol. You can see here they have a bunch of pools with quite nice APYs for some of them. So in this example, if you wanted a fart coin in hype or a pump in hype, or just a hype against a USD pair. These are all, or here's an ETH pool as an example. So pretty much anything on this one, it's kind of limited to